All right, what's going on, guys? Terry James, your mortgage guy, coming to you again. Um, Want to talk about a couple of things. Is that one of the things to do, what not to do, once you have pre-approved. Okay, so you've gotten pre-approved, you have your loan documents in, they've been to underwriting, and you are ready to go. You're just waiting on the purchase of a home. You're just waiting to get an accepted offer. All right. Now, this is a part where many buyers and clients oftentimes cause issues that they think may not be a problem. So I'm here to help us figure out and help guide you into things you don't want to do once you are pre-approved. Okay. And so, as you know, there's a difference between being pre-qualified and pre-approved. I am talking about after you have been to underwriting, after you have had all your documentation reviewed. These are a few things you do not want to do. All right. So take a pad, write down, and make sure you get everything. All right. So, and as always, make sure you subscribe so that you're updated with all the videos that come out. All right. So, the first thing that it seems simple, and we may not think that it needs to be said, but trust me, I've been doing this a long time. It needs to be said. That is opening new credit accounts. All right. So you think that you've been approved and underwriting has got you all set, and you think that's a green light for you to go out and get new credit card. This is not. Do not even apply. Once you've been pre-approved by underwriting, once you've turned in your documents, everything else has to be put on hold. Do not go out and apply for new credit debt. Do not apply for a new Home Depot card. Do not apply for a new Macy's card. Don't apply for any new credit debt, period. Okay. And I also have to point out that the next thing we don't want to do is do not get a car loan. Car loan has ruined so many home loans. Okay. People, buyers, sellers, everyone's ready to go. Come to find out, underwriting does another check because they do that before you close. And come to find out, the borrower has a new credit card or a new auto loan account on there, which means now your debt to income ratio, we now have to factor in that $400, $500, $600 payment, which in many cases can throw off your debt to income ratio and can actually cause you not to qualify anymore. All right. So second things you do not want to do is do not apply for an auto loan. The auto loan can wait until after you have closed on your purchase. Okay. So understand there's a difference between being pre-approved. Okay. You're underwritten approved. That's great. But that is not a green light to go and apply for a auto loan. Okay. The next couple things we don't want to do once you've been pre-approved is you do not want to open up, along with that, is any new debt. So anything that can count against your debt to income ratio, do not apply. Do not open up any new credit. I don't care what it is. Don't do it. Okay. One of the other things that many buyers don't know, and they assume that because, hey, well, I'm getting paid the same, buyers in the middle of a transaction will change jobs. All right. So you do not want to change jobs while you have already been underwritten. Once you've been pre-approved, not pre-qualified, but once you have been pre-approved, you do not want to apply for a new job. You don't want to switch jobs. The reason why, okay, there's a couple things. Number one, underwriting has calculated your income based upon your current job. Okay, so they've ran the calculation, they verified, they said, hey, we have a loan based upon this. When you start a new job, even though your salary might be the same, okay, one of the things that can cause an issue is that if you find a home and you're going to close in 21 days, well, guess what? If you have a new job, most underwriting will require a pay stub from your new job to verify your income. An employment letter will not suffice. So even though they have an employment letter that says, hey, the client is going to be working this much, he or she is getting paid this much, that will not suffice for you to close your loan. You have to receive, in many cases, it's going to be 2 pay stubs. In some cases, you may be able to get by with 1 pay stub. So if you start a new job, we all know that once you start a job, you don't receive a pay stub for potentially anywhere from 2 weeks to up to a month before you receive a new job, depending on when the pay scale is, depending on when your new job pays. So do not start a new job. Hold off until you have closed on your loan, till you have the keys in hand, until the loan is actually closed. Do not start a new job, all right? One of the other things that we want to do and address is going to be starting out as large deposits, okay? That's going to be the other item. So one of the things that, because you are pre-approved, we've seen your bank statements, everything checks out, we're good to go. And then come to find out, once you find a home, there's large deposits in your account, okay? Those can cause issues because as underwriting, we have to verify where those deposits came from. And if we're not able to verify it, if we're not able to document it, this can cause a problem with your closing, okay? So once you do find a home, we may not be able to close as a lender if we can't confirm all of your documentation. So while you're in the process of looking for a home and you've already been pre-approved, your statements, you've already turned in 2 months of statements, do not make any large deposits, okay? The other thing that a lot of buyers don't realize is that, hey, I'm cleared, I'm good to go, my documentation is in, they've already reviewed it, I can do whatever I want. Here's the problem with that, okay, even with your bank statements, is that depending on how long it takes for you to get an accepted offer, underwriting in many cases will ask for updated bank statements. So from the last one that they reviewed, after they reviewed all your conditions and they reviewed your documentation, they are going to ask for the statements from then to now, to current. And so if you have large deposits currently, then your file is considered a condition, or that's considered a change. Therefore, now there's going to be more conditions layered with those large deposits. So you want to keep all large deposits to a minimum. I would say keep them at 0, no large deposits, okay? Now you say, okay, well, what's considered a large deposit? That's going to be dictated on your salary. And then large deposits also, the reason why they're flagged oftentimes is because they are from sources. For instance, if you see a checking account statement and let's say it just says deposit, it doesn't give a source, it doesn't say your employment, those are going to cause concern from underwriting because they have to say, okay, well, where did that money come from? Okay. So those are the things that you want to be on the lookout for. Even if you got a bonus on your job. So let's say you had a large bonus payout. Okay. Those are things that you're going to have to essentially document or show. Even though it might say the job, you may need to still write a explanation, a LOE, letter of explanation, on where that money came from, why you're getting paid that bonus. All right. So large deposits you want to be aware of once you've been pre-approved, to keep an eye on those. All right. The next thing is going to be, once you've been pre-approved and you've already got everything done, you're ready to go, you're looking for your house, you do not want to use your down payment money for any reason at all. Okay. So in your statements, you already have the money set aside. This is your closing. This is what we're using. Underwriting has reviewed your file. They've completed your file and they said, okay, based upon this information, we are ready to go once you find property. Now, what comes with that is that with your statements, okay, with your statements and your down payment money, once you begin to use that money, we now, as a lender, we have to figure out, okay, where is the money going to go from the money that was used, for your down payment and closing, okay? So that's why it's very important to make sure whatever money you have set aside for your down payment, for your closing, you do not touch that money at all while you are searching for a home, okay? Anytime there's a withdrawal, once we get updated statements and now you're short money, this is going to cause a big problem with your closing and with your agent. Once you have an accepted offer, we get updated statements, and now come to find out you used $2,000, and we might now be short $2,000 in closing. Okay, so it's very important that whatever money you've set aside and you said, hey, this is what we're using as your down payment in closing, you do not touch that money at all for any reason until you have closed on your home loan. All right. And so those are a few things just to be aware of, things you want to look out for, that once you've been pre-approved, things you do not want to do after you've been pre-approved. All right. So I hope this has been helpful for you. Hopefully you took notes. Make sure, as always, you like, comment, and subscribe. Contact me if you have any questions. All right. Until next time, take care.